Hello, I'm Eric Apple, principal and founder of Eric Apple Law. Welcome to another edition of our Blogpod. Today, we're examining if you should keep your long-term care insurance. Given that Americans are now living longer, it makes sense that there will be more people requiring long-term care. Nearly 70% of Americans aged 65 or older will need some kind of long-term care during their lives, according to the U.S. Department of Health and Human Services. Women typically need care for an average of 3.7 years, while men require it for 2.2 years. Long-term care can take many forms. However, it can be simplified to any kind of help someone may need with activities of daily living, such as bathing, eating, or dressing. It can also refer to assistance with instrumental activities of daily living, like taking medication, housework, or managing money. All the activities that become difficult due to injury, health conditions, or cognitive disorders. It's important to note that long-term care is not medical care, so it's not typically covered by Medicare or other health insurance except in limited cases. The cost for long-term care can vary greatly, with care in the home generally costing less than services at a nursing home or an assisted living facility. However, regular health insurance doesn't cover long-term care, and Medicare only covers short nursing home stays or limited amounts of home health care. It doesn't pay for help with day-to-day tasks or supervision. You can receive some help through Medicaid, but only after you've exhausted most of your savings. Hence, why long-term care insurance becomes an important consideration for those who require long-term services for a long period of time. But what if you've already purchased long-term care insurance? Have you seen your premiums rise dramatically in recent years? First of all, you're not alone. In some cases, premiums have gone up as much as 40 to 60% in recent years. The reason is that many insurance companies have suffered major losses on policies written more than 10 years ago. With far fewer people than anticipated letting their policies lapse, the industry didn't set rates high enough, and with interest rates being lower than expected in recent years, it became difficult for companies to attain an adequate return on investment premiums, and now they're looking to recoup those losses. If your premiums have increased, should you keep the policy, make changes to it, look for a cheaper one? Here are some factors to consider. First, if your policy is more than 2 years old, you probably will not be able to find a cheaper one to replace it if you choose to cancel the existing policy. It may also be harder to qualify for a new policy because you're older than when you purchased your original policy, and underwriting standards have become much tougher. Next, the general advice is that if the increase is 20% or less, pay it even if you think it's an unfair increase. However, if your premiums have risen more than 20%, you may want to reduce your daily benefit to try and keep the premium down. Additionally, you might be able to reduce your premium by lowering the rate of inflation protection. For example, if your existing policy increases your benefit by 5%, you might want to reduce it or drop inflation protection entirely. However, make sure it is not applied retroactively, as that would substantially reduce your ultimate benefit. Lastly, if you want to end your policy, most insurers offer an option that lets you obtain benefits equal to the premiums you've paid. This should be considered a last resort, as it won't pay for anywhere near as much as your policy would. We live in an age where every family is even more unique than the previous generation, and each family has particular needs and goals. So it's advisable to discuss matters such as long-term care insurance with an experienced elder law attorney. We can review your policy and your existing plan to determine whether it's in your best interest to keep your existing policy. We can also recommend other tools and strategies that can help ensure you get the long-term care you need without losing your life savings. Long-term care insurance can only mitigate your risk for certain variables, but keeping a policy in place can ease your worries and give you or your loved ones more options for later in life when there's more vulnerability. Stay tuned for our next blog pod, and in the meantime, if you'd like to find out more about asset protection, please feel free to visit our website at ericapplellaw.com, where you can learn more, give us a call, or drop us a note. Until next time, thank you for joining us here. Please like, subscribe, and share so we can help you and your loved ones become more informed and we can work together to live more powerfully into the future.